everyone, and welcome to our YouTube channel, Moneyline with Nancy at TV. In case you're not a subscriber yet, please do subscribe. Just press the subscribe button as well as turn on the notification bell so that you can get notifications when we upload our videos. Don't also forget to subscribe and join, follow, like our other social media platforms. Of course, you're seeing it right about now. Don't also forget to share this video across your platforms. Enjoy the video. All right, welcome back. Senator Osita Izunaso joins me right now, Chairman, Senate Committee on Capital Markets. Good morning, Senator, and welcome to the program.
Thank you. Good morning, Nancy.
Thank you. Good to see you. Now, let's talk. So, how do you feel with the ISA 2025? Let me start. Since I mentioned at the beginning, you are the promoter of the bill that has become an act.
Yeah,
so it's not an executive bill. It was.
No, it wasn't.
Yes,
it wasn't an executive bill. It's
yes.
a private member bill. ISA 2025 is something that I will describe as an idea that its time has come. You will recall that the ISA 2007 was enacted 18 years ago.
Yes, 18 years ago.
So it is no longer in tune with modern realities as it concerns the capital market globally. A lot of things have happened. And if you look at the previous act, you will discover that there are a lot of gaps. And those gaps needed to be filled. Namely, it did not recognize digital assets as securities. It did not even enhance structural exchanges like commodity exchange in terms of agriculture and mining. It didn't also look at several sensitive issues, including dispute resolution, which I'm going to come to that later. Investment and Securities Tribunal was not empowered sufficiently to do what this new act has empowered them to do now. And the penalties for offenders, Ponzi, market manipulators were not strict. But today we have very strict penalties for Ponzi operators and even other market manipulations. So it's a holistic act of parliament. And if you want to understand it well, let us even look at the long title of that bill. The long title is a repeal. It's not an amendment. We have to repeal the 2007 Act.
So that is do away with it completely.
It's holistic.
Yes.
Because there are two ways of...
So it's not an amendment. That means it's a wholesome, it's a new...
Yeah, it's a repeal.
Yes.
So it is a repeal of 2007, number 29 of the Act, and enactment of 2025 Investment and Securities Act. This 2025 also re-establishes SEC as the apex regulatory authority in the country. It also goes further to regulate the Nigerian capital market holistically by talking about protection of investors, maintenance of free, fair, and efficient market, as well as reduction in systemic risk. So if you look at the long title of the Act, you will see that it has taken care of the entire capital market holistically.
I'm curious to know why you said that it had to mandate like SEC as being the apex regulating capital market regulator, but SEC has always been.
No, it redefined the role of SEC.
Okay.
It makes the SEC more stronger.
Perhaps with the digital world
with
we
the
are
digital
in right
world,
now.
Digital asset and the crypto. You know, before now, there was even some kind of conflict between SEC and CBN.
CBN.
Initially,
in terms of digital
yes,
assets.
initially CBN thought they are the ones to regulate digital asset, but it's not their responsibility. It's that of SEC. So this law have also reduced that friction, that lapse between CBN and SEC. It has made it clear that this falls within the purview of SEC, because crypto asset is an investment instrument. It's not in the payment system of the country, so CBN cannot even regulate it. If you look at a system like in the U.S., it is the SEC, the U.S. SEC, that regulates the crypto and digital asset, not their Federal Reserve, as the case may be. So this law is holistic. It has taken care of virtually everything. I will just take you through some of the provisions of the Act. Let us even look at Section 26 of that Act. Section 26 is talking about digital asset, talking about securities. Section 26. It goes further in Section 27 to talk about exchange, classification of exchange, composite and non-composite.
Non-composite, yes.
Yeah, composite in the sense of multi-threading and listing and all the rest of them, while non-composite in terms of mono asset and all the rest of them. Then it even goes further to say that for anybody to operate in the capital market in Nigeria, or even in any investment and securities system in Nigeria, you must get SEC approval. That is Section 59. SEC must approve. So if SEC doesn't approve, you can't even operate in the capital market. And it even goes further to talk about financial market infrastructure. For you to establish a financial market infrastructure, that is Section 41 of the Act. You must also get SEC approval. If you don't have SEC approval, you cannot, because you must work within the orbit of the rules and regulation of the new Act and SEC regulation too. So you can see it is holistic. It is something that have come to redefine Nigerian capital market, to make it in tune with modern reality. You know the principle 1 of ISO is that you must have a strong regulator. That is what we have done now. So it is in tune with modern reality.
Okay, for me, what are the key investor protection mechanisms that you've put into this Act, especially regarding Investors Protection Fund, and perhaps how they improved on previous rules? You also talked about Investment and Securities Tribunal.
Well, number one is that one of the investment protection strategies now that we have adopted in this new law is that even if your license is cancelled by SEC, you will still be compensated.
Like what the NDIC does for the banking
exactly.
sector.
So
because before there's nothing like that.
So now investors are protected.
To the tune of, did you put any amount there?
Well, no, we didn't put any specific amount, but
okay.
But SEC can regulate it.
Can do that.
Yeah, because the investments are not the same. The portfolios are not the same.
Because for banks, for example, it's 500K. NDIC.
No, banks have even gone
higher.
Up to 5 million now.
Yes, 5 million. Yes, for some categories of customers.
But the maximum now is 5 million.
Yes.
But we're even talking to NDIC to increase it.
Oh, okay.
Yes, we are. We are speaking to them.
Okay.
Yes.
Okay. So that is for investment protection.
Yes.
How about the Investment Securities Tribunal you talked about earlier?
Well, the Investment Securities Tribunal, you know, it has always been there.
Yes, IST, yes.
Yeah, but now, in Section 306 up to Section 331 of the new Act, which is about more than 25 sections, deals with IST. Composition of the members of IST, jurisdiction, and process of appointment. All these are targeted at ensuring faster dispute resolution in the capital market, and also making it possible for people to have confidence in the capital market. I'll give you an example. Section 326 of the same Act defines the jurisdiction of IST in terms of investment and securities in Nigeria. And we took it from the Supreme Court judgment. There's a landmark judgment of the Supreme Court. In the case of Mufutaya and Ajayi, the Supreme Court delivered on January 13, 2023, where the Supreme Court made it clear that it is IST that has the sole responsibility of any dispute within the capital market. You know, before now, lawyers will rush to the court, to Federal High Court, because of Section 251 of 1999 Constitution as amended, to go and start talking about capital market infractions as a delay tactic. But Supreme Court have said no. Everything about capital market goes to IST. And even within that same law we're talking about today, Section 327 also defines, made it clear that appeals arising from IST can only go to Court of Appeal. It can only go to Court of Appeal. So IST is now the equivalent, if I may say, of Federal High Court.
So anything concerning capital markets, the dispute should
Should go to IST.
Yes, should go to IST.
Yes.
Senator, let's talk about Ponzi schemes, because I use this show a lot to tell Nigerians not to invest in anything that seems too good to be true. Ponzi schemes, pyramid schemes, financial scams. We've seen Nigerians lose so much money to that. During the days of MMM, we were all in this
I remember
country.
MMM, yes.
3 million Nigerians lost about 18 billion naira to MMM. From my own research too, yes, there's been also that one, yes. You know, from my own research, in the last decade, Nigerians have lost about 500 billion naira to Ponzi schemes. So this act, how does it give teeth to combating Ponzi schemes and fighting pyramid schemes? Because they take, Senator, I don't know if you've noticed, they take different shapes and colors and dimensions. But when I see that, I'll be like, this one a Ponzi scheme, you know. But Nigerians will not know. My director was telling me this morning that it's like you are eating hot jollof rice, you know. There's hot jollof rice in your mouth. I've come back again to talk about this because I think it's my duty to be able to educate Nigerians on that.
Yes, thank you very much for raising this issue. This is one of the things that made us to go into this new act. Nigerians love quick money.
Understandably so.
Yes.
The economy is not in a good
Well,
situation.
not only Nigeria, but all over the world, people love quick money. A situation where you will invest 1 naira, you make 10 naira within 1 second. All these are Ponzi things.
Schemes.
And this law have tightened it by having stiffer penalty against those who are operating Ponzi and pyramid schemes. Before now, you can do it and even there's no definite sanction for you. Today, if you're involved in Ponzi, you go to jail for 10 years. And you pay a fine of about 20 to 40 million naira. And all the money that you collected from people will be refunded to them.
Is it the jail time and the fine, or fine without jail time?
It depends on how the judge wants to interpret it. It can be both, because it's in the law.
20 million, is it not small?
No, 20 to 40 million. Depending on what you are asked to pay. But that is not even the issue. The issue is that you are going to refund all the money that you have made from people. You will refund it. Once it is proven that you collected this money from so and so person, you refund it. So I see Ponzi scheme as a money doubling. So we are now targeting those people because the time has come. If you get yourself involved in any shoddy deal of that nature, you go to jail for 10 years. So the option of fine is there, but it is still both. It is still both. And you see, it's not even only about Ponzi. We're also talking about other malpractices in the financial sector. Some attract 5 to 10 years imprisonment. They were not there in the law before. So today, everything has been defined. Everything has been defined. Like, if you operate any securities without approval of SEC, that is 5 years imprisonment. You pay 10 million naira and 5 years imprisonment.
So you begin to see all these illegal financial houses coming up now.
That is why if you are caught, you will pay 5 million and you also go to prison.
Is there anything to be done before they are even caught? Because a lot of them also get away with these shoddy things. Is there a way?
That is why the CBN, the SEC and CBN now, they have what they call surveillance tool. They are cooperating. And I'm also advocating that the surveillance tool should extend to Office of the National Security Advisor, NFIU, even DSS and the police, EFCC as well. Because if they have this synchronized surveillance tool, it will help them to monitor what these Ponzi people are up to. But you know, with the internet world we're in now, it's also easy to track them. Very easy to track them. So they know that there's a law against it now with stiffer penalties. So it will deter most of them from going into it.
Let's talk about if this new law allows states to raise capital market funds responsibly. It allows, even the former one allowed. But my question is around if it allows states to access market funds responsibly and to avoid fiscal mismanagement.
This is one of the greatest aspects of this new law. You know, in the old law, the states can still access funds from the capital market, but under a very rigid conditionalities. But now we have made it very flexible, very flexible. If you look at the old law, Section 226 of the old law that talks about how states can access money from the capital market is saying that states can access money, but there's a depth gap in that old law, Section 266. You cannot go above 50% of your indebtedness, your loan exposure. You can't go above it for the money that you're going to ask from the capital market. Even in the new loan you are taking, you can't go above 50%. But all those things have been reduced now. Before now, states and subnationals rush to commercial banks to go and take exorbitant interest rate loans, and also they rely heavily on the federation accounts. But we're saying no. Now you can have medium and long-term funding for your development projects through the capital market. So we have relaxed the role. And there's also mechanism to check how this can be expended. You know, if you are going to equity, you must go clean hands. If you are approaching the stock market, you must come with your records clean.
Everything clean. Corporate governance.
Everything clean.
Yes.
So those are some of the things that we have put in place to promote states from getting getting capital from the stock market. So that's what already been done.
What role did stakeholder consultation play in you getting out this final version of this act? How much consultation did you?
Well, I must commend the stakeholders. You know, this law didn't even start from the 10th Senate. It started from the 9th Senate, even up to the 8th Senate, but it's just that it was not assented to. So what we did was to bring it back, put it back in the system, and get back the stakeholders. We had a lot of public hearings. Even after we finished with the public hearings, and when the bill must have passed through the second reading, we went to public hearings. We even have to retire for a retreat with the House of Reps Committee on Capital Market. We had a one-week retreat where we also invited stakeholders. The stakeholders who did not even come to the public hearing, we wrote to them to bring their input. And they brought their input. And wherever we have disagreements, we invite them to meet us at the retreat. So I can tell you that the stakeholders were fully involved. And today we are also talking about better stakeholders engagement. The last time the Minister of Finance and the Coordinating Minister of the Economy came to our committee, we pleaded with him that government should release more funds for stakeholders engagement. Because Nigerians have lost confidence in the capital market. They have. They have lost confidence in securities and the exchange. So you have to bring back the confidence by engaging the stakeholders. In my committee, in the next quarter, we are trying to bring all the public quoted companies to a round table. We want to know.
That's a huge tax.
Yeah, what are their problems? How many of them? About 100 and something. So what are their problems? Are you having any problem? Tell us what the problems are. And we'll be able to look at a way to resolve them. Because we want other companies to be listed. Today, NNPC Limited is not listed. That is not what the PIA says. PIA says that NNPC should be a public liability company. But it is not listed. You can't have the shares of NNPC being held by Murphy and Minister of Finance and Minister of Petroleum.
Yes.
How? Nigerians must get into it. But again, I must warn from the beginning that NNPC cannot even do only private placement. If they do, I must warn from the beginning. If they do only private placement, the essence
it's not
lost.
Achieved, yes.
Nigerians there must be a buy-in of Nigerians.
IPO.
Yes, IPO.
Yes.
Look at in Equinor of Norway. Even the Saudi Arabian
Saudi Aramco.
Aramco. So these are companies that are partly owned by the people. So NNPC must be partly owned by the people. We are not saying that Murphy and Minister of Petroleum should divest all that they have. No, they should take certain percentage.
They are there on behalf of the government.
Of the government, yes, and leave the rest to the public.
Yes.
But it must, in fact, I'm not even sure that there will be approval for them to do a holistic private placement. They must have public offer where Nigerians can own this company. Because that is the main reason for the PIA in the first place.
Okay. Senator, as we close, how do you think that this act will enhance corporate governance in Nigeria's capital market? Finally, and what is your outlook moving forward? And what would you even say to retail investors? Because you mentioned earlier on that public confidence in our capital market has eroded. So what are you saying now as the chairman Senate committee? Should we have confidence to come back, even though the economy is not smiling?
I think the confidence is back with this new legislation. The confidence is back in the sense that I didn't even tell you about the unclaimed dividend. You know, before now, there has been lots of legislation from the Finance Act, DMO, and all the rest of them talking about unclaimed dividend. But Section 90 of this Act have made it clear that everything about unclaimed dividend will have to follow it as it is stipulated in this Act. So today, you have a system where you can check your unclaimed dividend. We have an investors clinic the other time in National Assembly. Senators who have invested in the past 20 years, we took them to the clinic. There's a link.
Yes, once you just put it
Once
there,
you just
comes
put the
up.
link.
Your name.
Your name,
Yes.
once you put your name or the name of your company,
It
everything
comes.
comes.
Yes, it shows you.
So we're returning back the confidence of Nigerians in to the capital market. So the first takeaway here is that today you have a well-structured arrangement where people can invest. So if you have something that's well-structured, you can't lose their money because it's well-structured. And those perpetuators of Ponzi and all the rest of them will also be penalized heavily. And again, for the retailers, the first thing for you to do is to, first of all, make sure you are registered with SEC. Because if SEC do not register your operation, then you can't even plan well. You can't even exist. And you might even go to jail because there are provisions for fine and jail, imprisonment. Every offense in the new act has punishment specified. That is why this act is different from the old act. So I believe that going forward, let us experiment this new act. And I must also commend President Bola Ahmed Tinubu. You know, it didn't even take him 2 weeks to assent to this act, to this bill. It didn't take him 2 weeks. So, because he understands the economy. He also knows that if you are talking about $1 trillion economy, how are you going to achieve it?
Without
the capital market. Yes. Without robust oversight of the capital market, how do you achieve the $1 trillion economy? It is a combination of both money market and capital market. It can't be one way.
Yeah.
It has to be a double traffic. So I believe that we're on course, and let us give ourselves another 6 months. I expect a boom in Nigerian capital market, regardless of what is happening
Trump,
now.
I just wanted to say
regardless of what is happening in the reciprocal tariff of Trump. You know, when that happened, those instruments there start going bearish. It start going low. And when it start going low, it's also a blessing in disguise for emerging economies like Nigeria, South Africa, Brazil, Malaysia, and all the rest of them. So it's a blessing in disguise because they'll start looking for a better investment opportunity and cheaper assets. And they'll come to Nigeria.
Okay, I think we'll leave it at that, Senator. Thank you very much for coming. I hope it will not take us another 18 years.
No. Laws can always be amended.
Amended, yes. Exactly. So thank you very much for coming. I've been speaking with Senator Osita Izunaso. He's the Chairman Senate Committee on Capital Markets. We've been talking about the 2025 Investment and Securities Act, which the President just assented to. That is the show for today. Please join us again tomorrow, same time on this station. I'll be here talking about money, business, finance, and economy. You've heard it all. Before you invest in Ponzi schemes, take note. There are stiffer penalties now. And I think you should also report once you see something going wrong. If you see something, say something. I've always been on that for years on the show. Be the best you can be and be the change that you want to see. I am Nancy Naji. Bye for now. Thank you for making it up to this minute, watching the video. Thank you all. Don't forget to subscribe to our YouTube channel, Moneyline with Nancy TV. Like, follow all our other social media platforms where we keep you up to speed with fantastic interviews, as well as markets, personal finance, business, and economy information. This is the best place to be. I'll see you all again in the next video.